Minutes to 10 a.m., but I'm gonna go ahead and start with this training today. My name is Monica Pascual, and I am one of the associates at the Brugman Group, and I'm here with Bonnie Graham, who is one of the partners at the Brugman Group. We're a law firm based in DC, and we specialize in providing counsel and advice on the federal rules regarding federal grants, and specifically in education-related projects. So this morning, we're going to be focusing on what are those procurement rules and procurement best practices when using your federal funds. And we're going to be discussing a lot of things. We're going to first go over a lot of the more general rules, right? And then we're going to go in more in depth in some of the frequently asked questions that we get from state education agencies and local education agencies, so school districts and SEAs that we work around in the nation. But also, if you get any questions throughout the presentations, please don't hesitate to ask those away in the chat, or yeah, I think the chat will be the most productive way to ask those questions. But at any point, yeah, just feel free to know that you can interrupt us. This training is really for you and for your benefit. So let's start right in. So first of all, what are we talking about here today, right? What federal regulations do we follow? As you all know, there are a lot of rules out there, and it can be pretty confusing at some point when thinking about the management of federal funds. Then you also have your state funds. You have different type of programs within your education programs. And it can be a little bit confusing of what are those rules that the districts and the SEA should be following. Well, first of all, you want to be aware of the Uniform Grants Guidance, or the UGG, as we call it in short form, where you can find that citation and those rules in 2 CFR Part 200. That is the Code of Federal Regulations. You will directly find the UGG. The UGG applies to federal funds across different agencies. So whether your organization that receives funds from, for example, the Department of Agriculture or from the Department of Education, these are just a general set of rules that were put together in order to facilitate, right, and provide just a general guideline as to how organizations, entities that receive federal funds should manage them. So in these Uniform Grants Guidance, you will find rules from procurement, right? What are those procurement processes that your organization should be following in order to be in compliance? But also you will find allowability rules. You will find rules regarding auditing processes. You will find rules regarding, what costs can be allowable, there are some costs that are just in the federal government are just not allowable at all. So it's just a good place where you will find just those general rules that apply to all federal funds across different agencies. But then, obviously, this is not as simple as that. And there are other set of rules that you also have to be aware and work across those different rules. So then you also have the Education Department General Administrative Regulations, which the short form is the EDGAR rules, right? And so in the EDGAR, which is found in 34 CFR Part 74-299, you there will find some specific regulations that the Department of Education has put out that apply to the programs and to the grants that they give out. And there you will find some more specific rules regarding LEAs and SEAs. So you also have to be generally aware of these. You have a set of rules that apply to direct grants, and then you also have a set of rules that apply to state administered grants, which is really the majority of the grants, right? Usually grants are first granted to the state, and then the state subgrants those grants or funds to the school districts or the LEAs. And then you have program-specific regulations. For example, IDEA, which is the individualized education for disabilities, right? Special education, you have those program regulations. With all the COVID-related funds, they have their own program regulations. The different title programs have different program regulations that you want to be more aware. But these are going to be more specific in terms of how to manage the program per se. But just being generally aware of the existence, right, of all these different regulations. And then, right, what do we do when there are so many program regulations, so many rules, federal and state rules? How do we know which one applies? Well, the general rule and rule of thumb that you should remember when going through these different regulations and rules is that the most restrictive rule, always wins, or you should always follow the most restrictive rules. For example, here in the screen, we see this chart or triangle that has different set of rules. So you have the program statute, you have program regulations, you have the uniform grants guidance, and you have different guidance documents in addition to state rules. So what do we follow? So for example, when thinking about inventory rules, the Uniform Grants Guidance provides that inventory, a physical inventory in managing your equipment should be completed at least every 2 years. That is what the Uniform Grants Guidance says, which these rules applies to all federal funds across federal agencies. However, if state rules or local rules provide that physical inventory should be done every year, then you will follow that most restrictive rule, which says that every year you have to do the physical inventory, because when you comply to that most restrictive rule of 1 year, you will automatically be following that other rule, that federal rule, which provides for doing physical inventory every 2 years. So this is just a general rule of thumb when thinking of the different rules that apply. Always, there's a different order, but when in doubt, follow the most restrictive one. And today, as I mentioned, we're going to be focusing on those procurement rules. However, this is a good slide for you to mark, which has different definitions of this lingo. When we speak about, federal funds and federal programs, there are different terms that we will consistently be using, and we want to make sure that you are following as we discuss them today and as you continue discussing them after we finish this training today. So when we speak of non-federal entities, we are referring to any state, local government, Indian tribe, or nonprofit organization that carries out a federal award. So in this definition, you will see there states, SEAs and LEAs are considered non-federal entities. Then a pass-through entity is that non-federal entity that provides a sub-award to a sub-recipient to carry out part of a federal program. So in the education space, right, that we are in, pass-through entities are usually the state. The state education agencies are those non-federal entities that receive that funding from the Department of Education, and then they sub-award it to a sub-recipient who will be, the local education agencies or the school districts. Then you have the recipients. A recipient, when talking about a recipient, is any entity that receives an award from a federal awarding agency. Then you have the sub-recipients, who are those entities that receive sub-awards from a pass-through entity, right? So recipient, it's like usually the state, and then sub-recipient is usually the LEAs. And then you have the contractors, which are not to be confused with sub-recipients. Sometimes when we're discussing procurement rules, it can be a little bit confusing of who is a subrecipient versus who is a contractor. And this is a really important note for you to have in mind when going through these rules and in your daily practices as in following these rules. So a contractor is an entity that receives a contract to provide goods or services. So for example, subrecipients is that LEA that receives that grant from the state and is responsible of managing a program. Let's think about IDEA, for example, special ed. Well, when that LEA subcontracts, right, or contracts a provider to provide services of children enrolled in special education, then that is a contractor. The main thing to remember here is that contractors are not subject to the federal rules. The non-federal entities, the subrecipients and the recipients, are the ones that are subject to the federal rules. So you must ensure that in those contracts, you are including provisions that allow or make that contractor is in compliance with the federal rules that you as a subrecipient must be following. In order to simplify, what I'm trying to say is that the subrecipient or the subrecipient is the one responsible of following the federal rules. So whenever there is some type of wrongdoing, right, by a contractor, the contractor, you can hold the contractor liable based on what the contract says, not based on whether they followed or not the federal rules. You will always be responsible of whether you followed or not the federal rules. Doesn't matter if it was a contractor who didn't follow the federal rules. You as a recipient are the one responsible for that, and the contractor is responsible of what the contract says. So as we will be discussing today, those contract provisions and contract administration controls are really important in this procurement process. So just here is a simple chart that provides a little bit of those, a description of those definitions that I was going through. You have usually the federal agency, in this case, the Department of Education, that then grants these funds to the pass-through entity, the state. Although there are some direct grants that then are directly granted to districts. But then usually the most common process is to grant it to the pass-through with the state, and then the state grants to the subrecipient, and then the subrecipients, in order to successfully complete with all the program requirements, or usually, contracts with providers of goods and services. And that is what we're really going to be focusing on today. Yeah. So just as I was talking today earlier, basically, we will be spending a chunk of our time talking about the Uniform Grants Guidance. In the Uniform Grants Guidance, you will find all these different subparts. As I was mentioning, you will find definitions, such as the definitions that I was mentioning earlier, but then other definitions that are really good for you to review, such as the federal definition for equipment versus supplies. I think it's just a really good revision to go over those definitions. You have the general provisions that apply across federal funds, across agencies. You have those pre-federal award requirements. You have those post-federal award requirements where that's where we will be focusing on in today. Because those procurement standards and those procurement rules are found in that subpart D. That is where we will be focusing on today. And then, as I was mentioning, in the Uniform Grants Guidance, you also find cost principles, and which include allowability rules for costs, and also those audit requirements. Because at the end of the day, we are here obviously to comply with the federal rules and ensure that we are all managing correctly the federal grants that you are all receiving. But also, the general purpose really is for when those the auditing time comes in, that you are ready to show that you are in compliance with all these rules and that you don't have any audit findings, really. So procurement is directly found in these specific citations, which is 2 CFR Part 200, 317 through Part 203, 27. And we will be going through, as I was mentioning, the different standards. So here in these rules, you have rules that are specific for states. I will discuss that in the next slide briefly. There you will find that states follow their own procurement rules. You then have the set of general procurement standards, such as all those written policies and procedures that you must have, and what things to include in those policies and procedures regarding procurement, such as contract administration, conflict of interest rules, the different thresholds for your purchases, which we will be going in depth today. Then you have your competition rules. The federal government is, in these rules is really specific that in the time of procuring, right, when you are to set out to procure goods or services, the non-federal entity must show that you are following competition standards or competing standards. So for example, one thing that the federal government really does not encourage when handling federal funds is sole sourcing. That is considered anti-competitive. When you are seeking goods or services from only one source, it is considered anti-competitive, and it's really a process that is just generally discouraged. Of course, there are some exceptions of when you are allowed to sole source under these federal rules, which we will be explaining in a bit, but just know that this competition standard is to be generally applied across all procurement methods, and it's something that your documentation, right? Because in all that we're talking about today, you want to ensure that you are documenting every single process and every single step that you take to show in those auditing periods that you are following and that you have proof of the steps that you are taking to follow these rules. And then there are certain rules that provide for methods of procurement, where there you will find rules regarding formal procurement methods, which include your micro purchases and your small purchases. And then you have the more formal procurement methods, which include, for example, your RFP processes or your sealed bids and quotation processes. And then, as I was mentioning, you have the non-competitive procurement processes, which are really an exception, and there are certain rules to follow when you are sole sourcing. So when do these apply? Do these apply all the time, or do states follow different rules from the districts? So the Uniform Grants Guidance provides that if you are a state, right, if you are the state education agency under 2 CFR Part 200, 317, that first quote or citation in the screen, states are to follow their own procurement rules. And I'm going to read directly from the regulations. When procuring property and services under a federal award, a state must follow the same policies and procedures it uses for procurements from its non-federal funds. In summary, as I was saying, states follow their own state rules, either it be for non-federal funds or for federal funds. However, the states will comply with 200.321, 322, and 323, which are listed on the screen, and ensure that every purchase order or other contract includes any clauses required by 200.327, which is that citation included in the bottom of the screen, which is it must ensure that it follows these federal contract provisions. But then what happens if you are not a state entity, right? If you are that LEA or that subrecipient that is receiving those funds from the state. Well, in that case, the non-federal entity must have and use documented procurement procedures consistent with state, local, and tribal laws and regulations and the standards of this section, which is what those sections that are included in the screen from 317 to 327, for the acquisition of property or services required under a federal award or sub-award. The non-federal entity must have these procurement procedures. So this is basically the big chunk of what we are dedicating our time to today. Just so you know, these are those procurement standards that we will be discussing in the next few slides that you want to ensure that you have written out in your policies and procedures. You have the correct citations. Flag. This is something kind of like a tangent note that I'm going to make. When auditors come, when they ask for the review your policies and procedures, the first thing that it will be easy for them to check is whether your citations are current, if your Uniform Grants Guidance citations are current. And the Uniform Grants Guidance citations changed if I'm not mistaken, in 2020, they changed. So just make sure if you have not reviewed them since before 2020, review them and just change and update those citations, because the numbering actually moved by one number. And that will be an easy flag for them to see, hey, this organization has not reviewed their policy and procedures. They may not be following the current federal procedures. So just a thing to note there. But as I was saying, when you're a non-state entity, right, LEA, school districts, that you're receiving funds from the state, you want to ensure that you are following all these procurement standards set out in these different citations, and that you have the appropriate policies and procedures to show that you have a process to follow these. And under these, right, procurement standards and procedures and reporting that we find in specifically in 318, it provides that the non-federal entities, the LEAs, must have documented procurement procedures which reflect applicable state, federal, and local laws and regulations that include contract administration system, open and full competition to the maximum extent possible, right? And then we can get into that non-competitive exceptions later on, that you have specific thresholds for purchasing, which is what we're going to be talking about under those micro purchases, those small purchases, that you have those thresholds, that you are awarding contracts, right, or bids, or to responsible contractors. You want to ensure that they are not suspended or debarred from engaging in contracts with the federal government. You want to prohibit any in-state or local preferences, because as we were mentioning, the federal government encourages competition. So it discourages or it prohibits actually for in those contract provisions or in seeking goods or services for the LEA or the school district to have preferences to coordinate with goods or services with only businesses around their region, right? It should be open across. So there shouldn't be any in-state or local preferences as you seek out goods and preferences. However, it does encourage domestic preferences, domestic preferences is specific to goods or services produced in the United States. So these two things are not to be confused, right? The federal rules discourage geographic preferences, right? So only contracting or limiting your contracting to your specific geographic region, but it does encourage domestic, which it refers to goods and services produced in the United States. You want to ensure that your policies and procedures include those conflict of interest rules, and that you have any mandatory disclosures as required on these different regulations that we're talking about. So first, one of these first rules or yeah, general norms that you should be following is that contract administration, right? What does it mean? What is it? What does it mean to have a sound contracting administration process? Well, you want to ensure that contracts are fully performed before payment. What does this mean? As I was mentioning earlier, contractors are subject, right, to the contract. They're not subject to the federal rules. So you want to ensure that your organization has a process in place where you are ensuring that you are paying those contractors after they have fully performed their the responsibilities, right? After they have fully performed. So after they have provided all of their goods, after they have provided the service, because in that way, you are ensuring that you're paying for services that are provided for in the contract, but also that you are complying with the federal rules. For example, if some services were not provided, then you are protecting your entity by not paying for those services, right? If under a certain program, because then if a finding could be that the local education agency used federal funds to pay for services that were never rendered, right? So it's just keeping in mind that how careful it is important, how important it is to be careful in these contract administration processes. We've gotten questions: what happens if, when contracting, for example, for the provision of goods, the vendor requires a deposit? That is okay. You know, this is a standard business practice to require a deposit. However, make sure that that deposit is not the full payment of the amount. You can have that deposit of the first deposit, but then ensure that you are fully paying after the services are rendered. So in general, what does this process look like? Well, you first start with acquiring or seeking out bids and quotes, right? If it is required under that threshold where you're buying. Then if it's also under those thresholds, if it's required by that threshold, then you put a purchase order or requisition. Then you put out the invoice, right, with proof of performance. And after the vendor has performed, then you can move forward with the payment and then request that reimbursement from the state if you are in a reimbursement under that reimbursement process. But yeah, just I think best practice here and something to note here is to ensure that you're paying after services are performed, and in contracts that contractors are subject to the contract, not to the federal rules, but you as the entity will always be subject to the federal rules regardless of what that contractor did or not. In those policies and procedures, you also must maintain written standards of conduct, including conflict of interest policies. These are really important because conflict of interest can arise when any of the following people listed in these bullets have a financial interest or another interest in the firm selected for the award, right? So whenever an employee, officer, or agent has a financial interest, any member of that person's immediate family as well. So and something to note here is that the federal rules don't define immediate family. And you, in your policies and procedures, you can leave it as, right, kind of like that general immediate family, but you can also take the liberty of defining a more restrictive rule by defining what immediate family means. Does that mean only, you know, spouses and children, or does it include aunts, uncles, grandparents, cousins? Just as something to know that you can define here. That person's partner, you also can further define if you want. Does it include legal spouse, or does it include, you know, domestic partner? And or an organization which employs or is about to employ any of the above, or has a financial interest in the firm selected for the award, right? And these organizational conflicts, which can also apply to non-government entities. So thing to note here is that as the LEA, as a subrecipient of federal funds, you are required, the federal rules, the Uniform Grants Guidance requires you to include these rules in your policies and procedures. And you must be setting out there though these rules, these provisions, and then also ensure that you include the process, right? It is a best practice, right? To include that process of what the organization will do whenever these conflict of interest arise, right? What will be that process to follow when someone notices maybe that there is a potential conflict of interest with this contract? To whom will that person to what office will they go? So that you have those processes and controls in place, because this can happen. It's not that it won't happen, it can happen. But important thing to note here is that you have internal controls in place to stop it from happening if it ever does. Just continuing off from those rules, right? You cannot solicit or accept any gratuities, favors, or anything of monetary value from contractors or subcontractors. So this means, right, if you read directly that first bullet, that means that you cannot even accept a box of chocolates in Halloween. That is because that is considered a gratuity, which has a monetary value. Even if that box of chocolates costs $5, it has a monetary value. However, in order to avoid this and in order to enjoy that box of chocolates in Halloween, you as an entity in your policies and in your written policies and procedures, you can set a nominal value to unsolicited gifts that the LEA will accept. So for example, you can set in your policies and procedures that set out all these conflict of interest rules and how you cannot really accept gratuities from contractors or vendors. However, gifts, unsolicited gifts of say $25 will be they're accepted or it's okay. And we also get the question a lot of what should be that nominal value, right? Should it be $5, $20, $100? And we've seen all these different values being put out in different policies and procedures. It really all depends on your organization. A school district that has maybe only one school. We've worked with school districts with only one school. Then that standard, those standards and those thresholds will look different from a school district that includes 20, 30, 50 schools, right? So this is a matter of your own LEA to analyze your needs and put those out as necessary in order, and then ensuring that you are following and avoiding any conflict of interest. And as I was saying, you want to include in those policies and procedures those standards of conduct that include disciplinary actions for violations. So you want to include that process of what to do whenever a conflict of interest arises, or when someone else notices a conflict of interest, right? What office to go to. But then if the violation occurs, which it can, then you want to have that disciplinary actions, those processes for disciplinary actions, and those internal processes in place to ensure that that you are following with the federal rules, which provide that you have those processes in place, and that you are taking the disciplinary actions according to what your policies and procedures provide. So as I was mentioning earlier, the federal rules encourage competition. And this is specifically found in 2 CFR Part 200, 319, where there you will find the rules regarding competition and how the federal government encourages this type of practice. For example, what it says is that all procurement transactions for property, which, goods or services required under a federal award must be conducted in a manner providing full and open competition to the maximum extent possible. So right again, in your documentation, you want to ensure that you can show that you are not, practicing anti-competitive standards. However, there are some rules for non-competitive procurements that can only be awarded in certain situations, and these are the famous called sole sourcing practices. We have these different methods of procurement that the federal rules provide. We have the informal procurement methods, which include micro purchases and small purchases. Yes, they are different. They are both small, but different kinds of small. Then you have your formal procurement methods, which there you will see more formal processes that include much more documentation and require a lengthier process, such as seeking out quotes and bids from different contractors. And then you have the non-competitive standards. So let's start with the easy, the simple, the friendly, micro purchases, and these which are included in the informal procurement standards. So really here, what the federal rules provide is that awards can be awarded without price or rate quotes. So here, under the informal procurement methods, which are meant to simplify and speed up the process of purchasing those more, those smaller items that maybe offices or districts need recurrently, can be awarded without price or rate quotes in non-federal entity if the non-federal entity considers the price to be reasonable based on research, experience, purchase history, or other information and documents it files accordingly, right? So what does this mean? What does reasonable based on research, experience, or purchase history mean? This is a really general, vague legal language that it's kind of difficult to define. Here, what auditors are looking for is that although the price and rate quotations are not necessary, you can show through documentation that you are being reasonable based on your own practices, that you are purchasing goods and services with reasonable costs, right? So what we've seen in some other LEAs or other districts do in their procurement offices is when they, in the documentation that they have to support these micro purchases, they include a form, right? Where in that form, the person responsible of filling out the procurement can check mark, right? What is the reason of this purchase? And then they can check mark, well, it's reasonable based on research, experience, and purchase history. It's like a check mark that it's included. And that, in addition to the purchase and the invoices and those additional items, can be shown to show that it's been reasonable based on research and experience. And in regarding distribution, to the maximum extent practical, the non-federal entity should distribute micro purchases equitably among qualified suppliers, right? So you want to ensure that those micro purchases thresholds, that you are keeping them separately, and that you are purchasing from those qualified suppliers, and you're not surpassing those micro purchases when buying. So what is this threshold when we're talking about micro purchases and all these rules about reasonable experience and research? Well, the federal threshold for micro purchases is $10,000. But right, that is a federal threshold. It's $10,000. However, an LEA can set out in their policies and procedures a lower threshold as you find it appropriate for your practices. As I was saying before, a school district that has one school versus a school district that has 50 schools can look different. So even though the federal threshold is 10,000, if I'm not mistaken, we were talking earlier, and I understand that in your state, the threshold is also $10,000, but know that you can, in your federal policies and procedures, you can set a lower threshold as it is appropriate to your daily practices. However, you can also self-certify to increase that micro purchase up to $50,000. So a non-federal entity can self-certify that threshold up to $50,000, but you can only do that if you comply with these three provisions, right? If you're a low risk auditee for the most recent audit, if your annual internal institution risk assessment to identify, mitigate, and manage financial risks, or for public institutions, or a higher threshold consistent with state law. And that is provided in these specific regulations. And then if you want to have a higher threshold over $50,000, you must have approval of the cognizant agency for indirect costs. But just this is something to note here for your micro purchases. These are flexibilities that the federal rules provide in those purchases that fall below these thresholds, either the federal or your own local thresholds. And you don't need to seek out quotes and bids if you can show that the price is reasonable based on research experience and prior documentation. And then what about the small purchases, right? Because within those informal procurement standards or procurement methods, we also have the small purchases. So the small purchases are those purchases that are greater than the micro purchase threshold. So if we're sticking with that federal threshold of $10,000, so the small purchases will be anything above that, but under the simplified acquisition threshold, which in the federal rules, that threshold is $250,000. $250,000, I'm sorry. And then, but those thresholds, once again, check your state and local rules to see what are those thresholds. And here, what you must seek in terms of price or rate quotations is the language is a little bit different from those micro thresholds, which it's only based on reasonable experience and history. Here, you have to request price or rate quotations from an adequate number of qualified sources. As you notice here, it doesn't specify that number. It just says adequate number of qualified sources as determined appropriate by the non-federal entity. So it has to be more than one, but could be as low as two. Here, right, once again, in order to comply with the federal rules, you have to seek out quotations from that adequate number of qualified sources that you define in your policies and procedures. However, follow state and local rules regarding these different thresholds that would apply, and once again, follow the most restrictive rule, right? I understand that in South Carolina, I understand that the small purchase or you need quotes and bids, at least 3 quotes and bids in any purchases between $10,000 or $25,000, right? So so that range for small purchases, that range is $10,000 to $25,000, and you would need those 3 quotes. So just make sure that you are following those restrictive rules and the more restrictive rule. And remember that you should have that documentation to show that you are following the rules. And then you have your formal procurement methods. So formal procurement methods will be anything that is above those informal procurement methods, right? And here, you will you have to follow a certain type of rules, and these are more and more restrictive. You require documented procedures and require public advertising. And here we see these different type of processes, such as, your seal bid processes, where you are required to choose the contractor that bid the lowest price. And then you have your proposals methods, or RFP methods, which the federal rules provide that other factors other than price can be taken into consideration, right? So under the federal rules, the difference between seal bids and RFPs is that for seal bids, it's used for more when you are seeking only based on price and you want to seek out the lowest in price. And for RFPs, you can take into consideration other factors other than price, such as the vendor's experience, for example, or longevity of the project, or duration of that good or service, how it will be, how it will benefit the LEA, right? We have a question here in the chat regarding small purchases from Jane. Question on small purchases. How about if the vendor has a state contract? Normally, if the vendor has a state contract, we do not acquire more quotes. The state contract number of the vendor is written on the PO. Is that allowable? Well, is your question if you require more quotes from? Well, Bonnie will actually get into that at the end of the presentation. There are a few slides where we included some FAQs, and there is a specific FAQs on what happens when, there's a contractor already under the state list of contractors. But you have to ensure that, if you are seeking out your own vendors, and that is within, and you have to comply still with those rules and with those small purchasing threshold and rules. So if it falls under that small purchase rule and under the state rules, it requires those quotes, then you do need, as a LEA, you do need to go out and seek those quotes and those quotes from the different vendors. What about local contracts negotiated by our district? That question, I would need a little bit of more context. I don't understand what you would need by local contracts negotiated by our district. So if you, David, if you can expand a little bit on that, and we can get back to your question to better understand what you mean by local contracts that are already negotiated. And then what about to non-competitive proposals, right? As I feel like I've been talking about non-competitive proposals and source sourcing now since the beginning, and now we're finally here in this slide. The non-competitive proposals or sole sourcing are appropriate only when micro purchases, because that's what we were saying. The federal rules don't provide for requiring any bids or quotations. You can seek out from only one vendor if it's based on reasonable cost, based on research and experience. So anything under that micro purchase threshold, the item is only available from a single source. However, I included all these little stars in that bullet point because auditors, that is a really high bar to reach. Auditors will come and question whether really there is only a single source, whether there's really a single vendor in the entire United States that can provide that good or service. So once again, this is really an exception. It is a really high test, high bar, and you really have to show that it was really only the single source that was able to provide that. So you want to have, like, once again, recommended, you want to have those processes in place, internal controls, and the documentation that shows that you are seeking quotes and bids, if above that micro purchase threshold from a number of different vendors. Another exception is when there is a public emergency for the requirement that will not permit delay resulting from publicizing a competitive solicitation. But note the time exception, a time element in this exception, right? So public emergency, we think about COVID. However, really this exception only applied really at the beginning of COVID for maybe seeking out hand sanitizer and other protective materials, because that delay will not permit a delay resulting from that competitive solicitation. So there was that time is of the essence element at the beginning of COVID, but we're no longer in that period. But it could happen, a public emergency could also correlate to natural disasters. Just make sure that you are complying or noting that delay, that delay could not happen or it will impact the program if we don't get it now. The federal awarding agency or the pass-through agency or the state, right, expressly authorizes, right? So you have to put out a written request to the SCA requesting authorization to sole source. And if you have that express authorization, then you can move on with it. And if after soliciting from a number of sources, competition is determined inadequate. But once again, here you want to show that you did go out and seek quotes and rates from different number of sources. With that, I'll leave you to Bonnie. I see that we have other questions, but I think some of those questions, Bonnie will be talking about those at the end. We have a few slides that specifically talk about that. So yes, but really quick, David, will a sole source letter from a vendor source suffice? And no. The general answer there is really no, because I think that would basically benefits that vendor in saying that they're the only one that can provide that. You really have to show that you did your research or you did try to solicit from a number of other sources before determining that there was only one vendor.
Yeah. So we'll just kind of cover a couple more of the general standards, and then we're going to dive into all these questions and certainly appreciate you guys asking them. So cost price analysis, this has to be done anytime you have a procurement action over the simplified acquisition threshold, which is that threshold in which you have to go to bid. The federal threshold is $250,000. Obviously in the state, it sounds like your bidding threshold is about $25,000. So what is a cost price analysis? It's essentially an estimate of what the total contract price will be. And it's kind of how you budget, right? Like, what procurement method am I going to need to go through with this vendor? You're doing this anyhow. Just make sure you document it. You have kind of a process that's followed that shows this analysis is being undertaken. Also, if you ever have a contract modification that exceeds that threshold, again, you have to run a new cost price analysis. So just kind of keep those things in mind. Profit, to the extent there is going to be profit earned on the contract, it does need to be negotiated as a separate element of the price so that you're kind of comfortable with what is in fact appropriate. So Monica, if you want to do the next slide. And then domestic preferences, this is language that was added in those 2020 revisions that Monica talked about. And there's actually just in August, so last month, additional updates and clarification in this particular section. It is low-hanging fruit for an auditor if you don't have this language included in your contracts, in your purchase orders. And so, it's just something to keep in mind. And it has no teeth as far as what's really required here. I mean, there's so many like lawyery language phrases in this. It's like, to the greatest extent practical, you should really try and do this, and please try this, your very best, and da da da. I mean, so it's not like a mandate. I can only, move forward with a vendor who is purchasing materials manufactured in the United States. But it is a clause, right? You must include language of the section in all of your subawards, contracts, and purchase orders. And so that's what I mean by low-hanging fruit for an auditor. They'll sort of look at your standard terms and conditions, and if they don't see this language in there, then that would be sort of a corrective action you'd have to make. All right. I think, oh, and the last one before we kind of get into these frequently asked questions is on suspension and debarment, and just reminding everyone that we can't move forward with a contract with an entity that's been suspended and debarred. And so there's certain steps we have to take to ensure that we are in compliance with this. We can do it in a number of different ways. You can check sam.gov. You can ask for certification from the person or company in which you're contracting, or include it as a condition in those terms and conditions to the award. I would suggest definitely including it as a standard terms and condition, because, you know, just depending on the timing of when you check sam.gov, you know, circumstances might change between that check and when the contract's finalized. And so having it as a standard term and condition kind of is a safeguard for you, that, you know, should there have been any unexpected, unanticipated changes, right, then you're still sort of covered there. All right, so before I kind of jump into some of the prepared frequently asked questions, I want to start going through the ones that have shown up in the chat. And so first, let's talk about this idea of a state competed contract, and can we put out purchase orders on that state competed contract? Do we have to run our own competition if the state has gone out? And where we typically see this in these state competed contracts is for technology. And so a lot of times states have negotiated technology purchases and kind of have a contract, and then with this negotiated price, and then school districts can submit purchase orders under that sort of umbrella contract that the state put out. This is such a lawyer answer, but whether or not, you know, that requires additional backup, or if we're using our federal funds, honestly, I've seen auditors go both directions, right? And so there is an argument within the regulations that a state sort of competed contract would meet those competition requirements, to your point, right? That hey, we've already gotten the competitive pricing. The state negotiated this contract with the understanding that it would be an open contract for our districts to submit purchase orders against. That's how they got the pricing they got. We already know that there were other interested vendors that lost out on the contract. And so, you know, we feel assured that we met the competition requirements. And I think that's a reasonable position to rely on and to sort of start from, right? And then further, you know, just like a cooperative purchasing agreement, or just like anytime you're sort of using a third-party fiscal agent as the lead negotiator on the contract, those things maybe will work for purposes of meeting competition requirements. But I just want to flag for you that if you are using federal dollars on a contract, as Monica just kind of talked through, there's a lot of different federal rules that kick in, certain conflicts of interests that we have to be considered, the checking to make sure the vendor's not on sam.gov, you know, having proof that we have our domestic preference language in our terms and conditions and other applicable federal terms and conditions, taking affirmative steps to make sure we're sort of contracting with entities that are small, women-owned, minority-owned businesses, right? So all of those kind of general remaining federal procurement requirements are still going to be the burden of the district, right? So I can rely on an open contract, competitively sort of a competitively selected and with a competitive pricing. But if I'm using federal dollars, right, then it's going to be on me, the school district, to make sure that the other remaining federal procurement requirements are managed, are satisfied if I'm going to use a federal money in order to sort of make a purchase order under that contract, right? So it doesn't absolve us from all of the federal rules. It just is going to satisfy the competition element of federal procurement. Local contracts. Typically what we see here is so I think what's kind of confusing about this is if your district competed at a contract, then presumably it met it ran the competition consistent with federal rules, right? If you've gone out and publicly advertised in order to come up with an open contract for the district to use, then you've actually met the federal procurement requirements, and you can pay for that contract in part with federal funds and part with non-federal funds, depending on sort of what the items are. So one of the ways that we typically see sort of open contracts at the local level is usually for like office supplies or school supplies, right? And so the district might say, okay, we're going to go through a competitive process to have our like office supplier district wide, and we'll run it open, we'll have it open for a year long, and then we can submit purchase orders against this open contract, but the original contract itself was competed consistent with both state and federal procurement requirements, which would mean if the total sort of aggregate amount of this agreement is going to exceed $25,000, we publicly advertised that agreement. We asked for sealed bids, or it was a response to an RFP, right? And we kind of went through the full sort of formal process. We selected our vendor who was most advantageous to us, and then we created this open contract that now school principals or other sort of program directors, right, can submit purchase orders under that competed contract. But at the local level, if you're talking about sort of the district negotiating the contract, then if we're going to use those federal dollars, at least for part of that, we have to presume then that you mean that they met the federal procurement requirements as well as the state procurement requirements when sort of going through that negotiation process. What about a sole source letter from a vendor? Is that going to work? Probably not, as Monica already mentioned, right? Not for your auditors. So we have seen auditors take a close look at procurement. Procurement's become such a hot topic, I think, because of all of the COVID relief dollars, a lot of money that came in with a really short time frame. And typically our grants are predominantly spent on salaries and supplies, right? And so all of a sudden we have this huge influx of money, and it's short-term money. And so we can't really pick up a bunch of salary costs. So we're all of a sudden paying for we're seeing a spike in contracts. And because of the spike in contracts, we're seeing a spike in procurement issues and a lot of focus on procurement from our auditors. And so as an example, there was an audit released for a college that was spending its higher education emergency relief funds. And what the college had done is they had gone back to their existing curriculum provider, like the entity they had used to help design their program, and for like 3 different programs that they were offering that were in-person programs. And they entered into this contract in like June of 2020. So we're talking like right at the start of the pandemic. They went back to their existing provider, and they said, look, we need to pivot from these in-person on-ground programs to hybrid or distance education offerings because of we're like right in the height of the pandemic. And those curriculum providers sort of came back, and they worked with them, and they had this long-standing relationship. They'd worked with them for over 10 years. As I said, they originally designed the program. They went back to them to help them sort of transition this contract with them, to transition it to an distance education process. And they were later audited, and the auditors questioned those contracts, saying that you should have gone through procurement, right? And the college pushed back, and they're like, wait a second, like, this is a sole source situation. I mean, they were the original designer of our curriculum. Like, doesn't it make sense that we would go back to them when we had to switch from in-person to online? And Number two, right? This was an emergency. I mean, we were talking about pivoting in a really fast time frame. It was the summer of the pandemic, and we were trying to get this up and running for our fall term, and that we wouldn't have been able to sort of go out to the field, and who else knew these programs, and all of this sort of justification for why they went back. And the auditor's response was like, no, there are other vendors who provide similar services. You should have gotten comparison quotes. It's not a valid excuse. And I bring it up because I think that it is very, very, very hard to convince an auditor that you are sort of permissibly in a non-competitive procurement situation, right? That the sole source letter, that is not going to suffice, right? They're just not. Most auditors are going to sort of second guess that. They're going to do their own look. The curriculum materials, the software that's copyrighted, that's not going to be enough, right? Typically, they are going to want to see that you're still soliciting quotes or getting a price comparison for other providers that have maybe not the identical curriculum, not the identical software, but still something that demonstrates that the pricing you're getting is reasonable. That's the entire purpose, sort of backbone of federal procurement, is that the federal government has basically said that the way we ensure or safeguard our federal dollars is by demanding that the sort of pricing be considered reasonable. So I just, as Monica kind of put her asterisks next to the sole source, and I just think it's really hard to justify. The way you can kind of move forward is open it up to competition, right? And let's also be very practical here. Everybody knows who they want to contract with before they start procurement, right? And I know that, right? You know that. That's the truth of it. That doesn't mean we don't have to go through the process. And I was speaking with another state and another group of districts, and they were saying, well, but Bonnie, like, what's the value? We've used this assessment company for years. We've invested in all of our PD and implementation. There's no way we could pivot at this point in time to a new assessment company. Like it would, the onboarding costs alone would make it sort of nonsensical to kind of do this. And I can appreciate that. But look, if you've had a contract going for 3 years, for 5 years, you've got to sort of at least go out to bid, at least put it out there and see whether or not you're still getting that fair price. Because, even if you have a vendor that you're going to probably use, that you've been using for years, you've liked their services, et cetera, putting something out to bid and having them recognize, or respond to a proposal in which they have to sort of clarify and justify their pricing, that does help drive down pricing, right? They're going to be cognizant that they have to stay competitive in how they're going to price this, knowing that there are other potential vendors that are trying to get this business. And so that's the idea behind it. I understand it's administratively burdensome. I understand that it feels like a lot of extra steps to get to something but the idea is it is a way to, again, help safeguard and ensure we're getting that best price for our federal dollars. All right. So what about purchasing groups, cooperatives? So you can go ahead and skip ahead to that question, Monica. So I know I'm going through all these questions in the chat. You guys have the slides. I just want to make sure we're kind of going through the questions you're putting in. Can we do that? Do we have to run our own procurement? Maybe, but it goes the same idea with those open contracts, a state or intergovernmental agreement, an open agreement that the state runs. You may be able to use it, but it's only going to cover you so far as competition requirements. If you go to the next slide, right, all the other same things, all the other requirements around procurement, you're still going to have to demonstrate. So, you're still going to have to show that that you've checked SAM.gov, that the federal terms and conditions are in there, that you've done the cost price analysis if it exceeds the bidding threshold, that you've done all the other steps necessary. The only thing you're able to rely on that cooperative for is the actual competition and making sure that they've run through the competition. Do vendors with state contracts such as Apple require additional documentation? As I said, so let me just like clarify a little bit between well, we can look at the IT one. Also, there's a qualified list, and then there's an open contract, right? So sometimes the state comes out with pre-qualified lists where they've basically vetted certain vendors and said that they are qualified. And then you can sort of choose among those vendors, but you still have to get either with, depending on the range of your or price of your contract, you still have to get the comparison quotes or get the bids for them. It's just that you're soliciting among the qualified lists of folks, right? What about IT? What if we've already gone through a procurement, we're using Apple products? Can then we like limit it to Apple products as we go forward? Do we have to rebid? Again, you know, first of all, there's more than one vendor that sells Apple products. It's not like I can only get an Apple product from Apple itself, right? There's technology stores, and you know, Apple products are sold in a lot of different places, and so that's not, you know, the fact that it's Apple does not mean it's not something that we can't price shop, right? And so, you know, if you're probably going to have to have the additional documentation, right? You're probably going to have to still demonstrate that you are price shopping, that the pricing you're getting for whatever the technology you're going to purchase is in fact competitive. Now, as I said, some of our states do have open technology contracts, like where they've competed a price. So maybe for districts, they've said, okay, a district can get this laptop for this discounted price that we've negotiated on behalf of all of our districts as a state. And that would work if for competition, again, just for competition. And then if you're using federal dollars on that purchase, then you're going to need to still ensure that you're getting the other federal requirements are being met. Can a vendor be used to purchase materials books from a written if it's written in the grant without being solicited first? Okay, I know we have a slide on this one too. This kind of goes into this idea of what does it mean for the state to approve a non-competitive procurement? Is it sufficient for, there it is, for me to just list a vendor in my application, and then my application is approved? Does that work? You still have to go through procurement. That's not going to work. In fact, though, the state has templates, right? So they have templates by program where if you want to make a specific request for a non-competitive selection of a vendor, you would fill out the state template, it would go to your program officer, and they would approve it using that template. It's got to be really explicitly asking for the non-competitive selection. If you have listed a vendor in your application, how does the state know whether you competed for that contract or not, right? You're not indicating upfront whether or not you've followed procurement. You may have followed procurement in order to even select or name that. So that alone is not going to work. It has to be, you have to flag for the state explicitly that what you're asking for here is not just approval of the goods materials, but in fact, approval of the non-competitive selection of that particular vendor. How do we treat services that are provided by third parties, but the demand exceeds the supply? So things like speech language, special education services, like do we still have to price compare that? Yes. The federal regulations are really clear in 2 CFR 200-319 that competition applies to the solicitation of goods and services. In fact, that language and services was added specifically in the 2020 revisions. And so I know a lot of states kind of think of professional services as its own bucket, or maybe the state law will have exemptions for certain types of IDEA services that don't have to go through federal or don't have to go through state procurement. Federal procurement does not have those exceptions, right? The only selection you can make that is non-competitive are in those 5 circumstances listed in 2 CFR 200-320C. It's a micro purchase. It's a sole source. There's a public emergency that doesn't allow the delay of advertising. There's prior express approval from your SEA, or you did go out to solicit and you just had an inadequate or only single responder. Those are the only circumstances. So from the services, you're still going to have to do price comparison. You're still going to have to sort of look and make sure that whatever the hourly rate or the sort of established costs are in fact competitive if you plan to use federal dollars for that. So I understand we have to follow the most stringent procedures. South Carolina has goods and services which are deemed exempt from federal or from procurement, from the state procurement. Would this be applicable on the federal end? No, that's a great question. So if you have a certain type of good or services that are not subject to state procurement requirements, then the most restrictive rules become the federal rules. And what you can do in your procedures is say that because state rules don't apply, the state thresholds don't apply. And so I can follow federal rules using federal thresholds, which means as long as that contract is under $250,000, you only have to get a couple quotes in order to move forward. You don't have to go to public advertisement. If it's above 250,000, then you would still have to publicly advertise. You'd have to do one of those 2 formal methods. But please make those clarifications in your written procurement procedures so that auditors can track why it is you had a $100,000 contract that you didn't publicly advertise, right? Well, because it's exempt from state rules, federal thresholds apply, and I just needed to get a comparison quote to ensure my price was reasonable. Okay. So more questions on sole source. Our academic administrators shop the market and determine what tools will be used for instructional purposes. When their selection is their selection a sole source? What is to be done? How do we deal with this? And this kind of comes with instructional texts and curriculum adoption and all of these other things hey, how do we kind of do this if people are out there, again, they're shopping these items. If it's going to exceed $25,000, you need to write an RFP, right? Now, the way you can help deal with this is the RFP is to sort of hear from, different providers and have them sort of explain their different offerings and propose sort of what services they can provide, what the evidence of performance is, the outcomes is, right? And then you take that back and then they list a price, and price has got to be a selection criteria in an open proposal. And I get it, right? You know which one you want to use. Your academic folks have already told you, they're directing you, they're pushing you in this direction. It doesn't change that I still have to compete it, because maybe knowing that they are bidding on an RFP, they're going to come in at a more sort of competitive price point than they would if they just kind of sold the product to your academic team and they're like, look, we're we're the best on the market, we're doing this, that, the other, right? They're not going to be maybe offering you their best price because they're not sort of recognizing sort of the competition element of it. So that's, I get it. I really do. Everybody knows who they want to work with. They've kind of made up their minds before they even start this process. It doesn't change the fact that we got to go through the process, and we've got to document that. And that's kind of how we safeguard our selections from audit review. And then sort of Monica is kind of helping answer some of the questions in the chat as well, sort of speaking to this issue of specifying brand names, that is considered a non-competitive action per the regulatory language. So can a particular vendor It looks like there's
Bit-
I don't yeah,
They're-
Monica,
they're
it
funny.
looks like you've answered some of these. I'm trying to keep
I-
up. I know we got a lot coming in the chat. And I want to focus
Yeah.
more on the chat than the ones we kind of pre-fed because of course you guys are
Yeah.
here to have your questions answered. So
Yeah.
all right.
But one of the last question that I just saw, I think it's related to this specific slide, which is if the purchase threshold apply for each purchase order
Okay.
or per vendor per fiscal year. Yeah.
Yeah, so that's a great question. So you would, for the most part, look by vendor. And so what we saw, this becomes an issue when you have like disaggregated purchasing power, right? So maybe I allow my school campuses to be able to submit requisition requests to the district. And vendors are very savvy, right? They're going to start off and say, hey, principal of ABC school, like we've got this great deal coming on 3D printers for your STEM program. We think this would be awesome. You can get like 3D printers, and there's coding, I don't know, whatever. And they're, you know, ask, or maybe it's just one, because I think those are actually pretty expensive, but it's a micro purchase, it's under $10,000, let's do this. And the principal puts in their requisition request under $10,000. Okay, great. Well, then of course, who's the vendor going to go to next? The next principal down the street, and they're going to say, hey, your buddy over here just bought one. It's micro purchase. Don't worry about it. And so then you're going to get another one come in, and all of a sudden, we're above 10,000. We're almost above 25,000. And at what point do we need to pause and run a more competitive, more formal process before continuing to fill these micro purchase requisitions, right? And what we've seen from the U.S. Department of Education on audits in this issue is that the federal government expects there to be some level of a central depository of requisition requests, right? Some centralized procurement process where once I see, you know, maybe a single vendor come through, maybe it's close to the 10,000 line, maybe I'm going to go ahead and scan or run an outreach to my other principals and say, hey, is anybody else thinking about using this vendor? If so, we're going to have to go ahead and get quotes. Maybe I wasn't prepared, or, you know, it came in as a micro purchase, and then now I have a second follow-up request, and now it's going to put us over. And how do we do that? Again, it's just pause at the point in time where you're like, oh, this is gonna, we're really pushing the envelope. We're about to exceed this threshold. We're gonna pause, and we're gonna get as much contemporaneous information that the pricing we got is fair and competitive. A violation of federal procurement is not going to necessarily require the return of all of the funds on that contract, unless if you can show there was no harm to a federal interest. And the way you prove that is you prove that you got a competitive price. So maybe I didn't go through my normal process. Maybe I should have gone to advertise. Maybe I should have bid. But if I can pause things, get those quotes now, do my research, make sure I can show that the pricing is competitive, it's market rates, whatever we're getting, right? That is going to help safeguard you. It might still be a finding. It might still be something that we should have gone through a different process, but at least it kind of gives you a little bit of a buffer that the price was fair. And so there's not a harm to the federal interest. It's a corrective action moving forward. It's sort of making sure we have the internal controls in place to kind of catch when we're going to exceed a threshold and do the next level of procurement. But at least we're not returning the money. All right. So yeah, this idea, I see what you're saying. So over a year, if we have micro purchases, one of the things about micro purchases is that you're supposed to spread them around qualified suppliers. And so the idea is that we're not going back to the same vendor time after time in which you're gonna go over that threshold. But sort of, it's really meant for like a one-off, unanticipated kind of purchase. Like, oh, we just like this broke and we're starting programming on this next day, and we got to go out and get it really quickly, and therefore we're going to kind of make that replacement really fast. It shouldn't be that like it's part of my standard requisitions of supplies or my standard, right? Like that we would expect to either sort of have a preferred supplier that you've competed for, or spread those around to other qualified. If it's above the micro purchase, you need to follow bid quote rules as applicable to the threshold. How do we get to this idea of after solicitation of a number of sources, competition is determined inadequate? So I think, and Monica, it's hard for me to tell if Monica's responding or if these are the questions. So I'm sorry. It's like they kind of in the chat, they jumble together. But yeah, one of the ways you can do this, if somebody tells you they're a sole source, they're the only one out there, nobody else can do it, then you just say, okay, well, we're going to publicly advertise this contract and we'll see who responds. And if nobody else responds, then yeah, you can move forward with the single provider. And that is sufficient. It showed that you tried to do a more competitive selection process and nobody else was able to provide the things that you needed to provide. Here are the things to keep in mind. Do not ask your vendor, the potential vendor you want to use, to write your scope of work, right? Because that will disqualify them from receiving the contract. And do not run the advertisement from like Friday to Monday, right? It has to, we can't show it, it can't be like, oh, we'll just like, slip this in for like a half day on this one random weekend, right? It's got to be like giving, putting it out there, giving other vendors the opportunity to respond. But again, if nobody responds, then you're good. Move forward with your preferred vendor. Nobody else seems to be able to provide it or meet the standards that you need. And then you're safeguarded from that, from like a federal standard. What is the COTS?
That's the COTS, commercially available off the shelf. So that I just replied to that one. This is related to South Carolina law.
Okay,
Perfect.
okay. Yeah, and Bonnie, what you were just talking about regarding seeking out different vendors and showing that you sought out vendors, right, or quotes from an adequate number of sources, and after that you could sole source. That's directly related to Jeff's question regarding special ed services. And Jeff is telling us that he's from a rural school district, which is hard, right, to find different vendors, especially that provide these type of services. And now, Jeff, I see that you're writing out, if we show that the posted positions with various companies, we posted the positions with various companies and they had no one to interview, would that meet the threshold? Well, the threshold is met based on the amount, the cost, right? The cost that you're putting out there, the cost of how much it costs to have those services. So I would say that the threshold is based on the cost of those services. And so if those services cost less than your micro threshold, then you don't really have to follow, you don't have to put out bids and quotes because it's in the rules. You have to just seek out from, you have to choose from a reasonable experience and history. However, if the cost of having those providers come and provide services to your school district is above the micro threshold, then you still want to go out and put out those bids and quotations. But as Bonnie was just explaining, follow the suggestions that she provided. And then if you can show that after putting out those quotes for more than a week, right? Or you're following these reasonable rules or practices, and you still couldn't get any qualified vendors, then that's the way that you ended up with your vendor. I hope that answers your question.
And then the next couple questions relate to Amazon, which is a great question, right? Like, how do we deal with Amazon, the big behemoth that it is? What I would suggest is putting in some specified procedures on sort of when you can use federal funds for Amazon purchases, right? So maybe we only purchase with federal dollars if it's a micro purchase on Amazon, and that if it's going to be above the micro purchase threshold, we still want to do a sort of our quote process. But yeah, I mean, Amazon is one way to demonstrate multiple sort of competitive pricing, right? They are sourcing from more than one seller. they can on Amazon Business, right? You can get information around, you know, women, small, veteran-owned businesses, right? So there's definitely a way to incorporate, you know, using Amazon as a tool as part of your procurement process. The things to kind of caution or be careful about, right, is well, the federal terms and conditions to the contract. You know, if the contract gets to be too large, there are a lot of sort of specified terms and conditions that need to be included, that are hard to attach when making a purchase off of Amazon. So you know, a little bit of caution, kind of put in some parameters around it. Purchase cards, sort of a similar thing, right? Like just have maybe certain thresholds that you can't exceed on Amazon without going through like an approval process from your procurement office, where they're, again, kind of making sure that whatever it is we're purchasing is sort of consistent with our state and local rules, is consistent with those federal rules. So those are some of those precautionary steps. But yeah, Amazon is a big issue. You know, you know, seeing how those kind of aggregate over time, you're gonna pretty quickly potentially sort of exceed a threshold too. So you just kind of be cautious of that, put in those internal controls that and have some procedures around sort of the limit as to who can purchase from Amazon, what amount is the limit, and how they document that that they can show the various sellers that were considered. Yes, you'll get the slides, you'll get the recording, and I know we are right at time, so I'll sort of address these final question here. The proper way to handle if you only have one response from an RFP, document it to your file, right? Show exactly the procurement procedure that you followed, where it was advertised, how long it was advertised, who responded, and your decision to move forward with that single responder. Thank you, guys. I appreciate all the questions that came in. It certainly made for a more lively discussion. So hopefully this was helpful. If you do have some lingering questions, I think we do have our email addresses on the front slide. So you'll get this to digest and think about again as you are going through all of this. So thank you so much.
Thank you. Have a good one.
Thanks, y'all.